Hey, it's me. Uh, Here to talk about the second quarter of 2023 Portland real estate market update. So let's get into it with my quick overall thoughts. Um, One of the biggest issues right now is that people who locked in these low interest rates a couple of years ago, they're reluctant to sell. They've got these golden handcuffs on because if they do go to sell for a step up property or even a step down property, their mortgage payment is going to be greatly affected by the new rates. They just don't want to have to give up that 2.5, 3.5% interest rate. So that I think is going to take a long time to flush out of the market. Unfortunately, I think that we're going to be in this boat for quite some time until a good amount of those people need to or choose to leave. Home values, we'll go into this a little bit more in detail, but they have been on the rise and they are going to continue to rise because of low inventory. Overall, the market is pretty slow. We've got less sellers on the market because, as I mentioned earlier, and then we also have less buyers in the market as well because they don't want to, they're reluctant to purchase right now because of the perceived higher interest rates. Speaking of interest rates, I really don't see them going down dramatically in the foreseeable future, but we'll talk about that here right now. Okay, so right now you're probably going to be looking at a 6.75-7% interest rate if you were to lock in today with a signed contract. That's kind of where they've been bopping around for the past, really all year, in that 6.5 to 7% interest rate environment. So looking into this, you can kind of see right at the this is a 1 year synopsis of where mortgage rates were, but in March of last year is when they really shot up. So here's the thing: is the interest rates, they took this big elevator ride up. Well, I can pretty much guarantee you that they are going to take a slow and steady escalator ride down. It's going to be a slow process for things to kind of go back down. So we are looking at this elevated interest rate environment for at least the next 1.5 to 2 years. And when I say elevated, I'm going to say that means like 4.5% or higher. Honestly, the next 6 months to a year, I would be flabbergasted if rates were to go down to 5.5%. I really think that we're going to be in this 6 to 7% range for quite some time. Even if the Fed does not continue to raise rates any more than they already have, like they did this week, well, then the rates are basically going to stay the same as they are right now. Yes, they're going to flop around for a little bit, but yeah, they're not going to get below 6% until the Fed starts decreasing those rates dramatically. And there's going to have to be a lot more economic data to prove to Jerome Powell and the rest of the Fed chair that's warranted. So buckle up. This is going to be a long ride that we're going to be seeing these honestly normal interest rates, historically speaking, in the sixes for quite some time. We'll talk about home values here as well, but as far as interest rates go, get used to seeing numbers in the sixes. Okay, so the heat map here in the Portland metro area, I think this is really cool to look at. You see June of 2021, those really hot red numbers right there. It kind of condensed a little bit in June of 22, and then this past month, you saw that really condensed even more, and then on top of that, it lightened up, and that just has to do with there was less transaction, less buyer motivation for all price points, specifically that 400 to 500, maybe even up to 600, that first time or medium time home buyer kind of price level. So it's just interesting to see that things that were hot a couple of years ago is still hot, just not nearly as much as it was. So closed sales, like I kind of mentioned, that was weird. Closed sales are quite a bit less than they were in 2021. You can see that on the blue graph, on the blue bars there. Green bars is 2022. And like I said, that's just kind of how things are and how they, I think, are going to be for the foreseeable future. Pending sales, again, kind of the same thing, less than previous couple of years, and the trend is kind of going along with what we would assume would be the normal, market trends for the year. I am foreseeing that it's going to more or less kind of plateau where it is right now, and then as the fall comes, it's going to cascade down as it has the past couple of years and just years in general. New listings. So yeah, like I mentioned, there's not a whole lot of new listings coming online, and that's because those people that have those awesome interest rates, well, they're not interested in selling. So who is interested in selling? Well, that could be investment property owners that are looking to just get out of the Portland metro area. Maybe they were short-term rentals or medium-term rentals, and they just aren't getting the value that they were before. They could be people that have passed away, and the estate needs to sell, or even if 33% of all homes are actually owned free and clear. So they don't have an interest payment. So they don't have that same mindset or those golden handcuffs that I mentioned earlier. So those people would be not as affected. I think that once those kind of go through and those help kind of clear the way the next couple of years, then hopefully we'll get some more listings and things are going to kind of right size. But yeah, people are going to be very reluctant to sell and get rid of that low interest rate. But in due time, they will get flushed out of the market. The average mortgage is about 7 years, whether that's going to be somebody sells or refinances. So it will happen. It's just a matter of time. Active residential listings. This has to do more with the time on market. But as you can see, we are just now right where we were last year. And I can kind of see this, again, plateauing, and then in the fall time, cascading downwards. Right now, we have 2 months of inventory. A balanced market in Portland is considered 3 months of inventory. So right now, we are still a seller's market, believe it or not. And I really don't see this changing. Honestly, thank goodness we don't have a whole flood of sellers coming to the market, because what that would do is really, really devalue the price of the homes. If we've got a ton of sellers but no buyers, well, now it's going to be a race to the bottom trying to catch that falling knife. So that will prevent any kind of these low rates that people are holding on to, is going to prevent any type of housing market crash. You're not going to see a ton of inventory coming to the market all at once, whether that's from builders. We know that building permits have been historically low the past 20 years, and that has remained even in the past handful of years. It is just now starting to tick up the past 6 months or so. So between that and just these golden handcuffs that people have, we're not going to see this huge crash that I know some people are waiting anxiously for with bated breath. All right. Another slide that I know a lot of people have a lot of interest in, and I'm getting a lot of questions about, is what's going on as far as sales price go. So you can kind of see right there where things kind of really hit up a high, and then they started peaking down. Well, that's when they started cascading down. That's when interest rates really started to go through the roof and started to really rise rapidly. And then right around the first of the year, home prices started to rise again. And that's more or less, in my opinion, I think that's just because people got the message that these interest rates are here to stay, and no use just sitting on the toilet. You gotta make a move. So if you're waiting for that housing market crash, sorry to tell you, but you already missed it. So that was going to be last year. Now home prices are going to continue to rise, as you can see right there, and interest rates are going to more or less stay the same. Affordability index. There's a lot of metrics that go into this, but basically, how affordable is it to buy in Portland? And 100 is going to be perfectly affordable. So right now we are not affordable, again, mostly because of higher interest rates. If you look in the past couple of years, you're going to see that we were above that 100, and that's because interest rates were low, and that is a huge lever for your mortgage monthly payment, more so than the actual payment or the actual price of the property. the interest rate is a huge lever that affects that. So even though home prices were really high in the past couple of years, the low interest rates really helped move that affordability index higher. So until wages increase or interest rates fall, we're probably going to be lower affordability in the near future. All right, economic headwinds. This is something I've been thinking about for the past few months. With the student loan forgiveness program not going through, we've got student loan repayments starting here in October. So a lot of people are going to be having to pay a lot of money once again, and something that they haven't been used to paying for the past 3 years. I think that you're going to see a lot of discretionary income kind of come to a halt. Less trips to Target, less trips to I don't know, where are the kids going these days? To Dutch Brothers, to restaurants and eating out and those types of things. And I think that that is going to maybe be a bigger issue for the economy, more so than anything else, more so than interest rates and whatnot. So that is one thing I've got my eye on. I could definitely see some things starting to unravel maybe early next year. If there's one thing that's going to cause a slight recession, it could be that. You could see less spending, therefore could be layoffs happening, and then, just follow the rabbit hole down from there. So definitely something to keep an eye on. Okay, so Portland rental rates, again, historical average is 3%. Year over year, we are at 2%. So I think that's pretty freaking good, to be honest. The past couple of years, well, 2020 basically everybody just kind of held rents the way that they were. 2021, we had higher. 2022 was a little bit higher. So right now we're basically getting back to average. And the reason that that's not even higher than it is just because there is the supply level is, we'll get into population here next, but we have had some more units, some more apartment buildings come online. That's kind of helped things be regulated. And Portland is kind of right in the middle of the top. When we look at the top 20 metro areas, we're more or less right in the middle, which I think is not a bad place to be considering where we were a couple of years ago. So population growth, man, we are we'll call it that light pink color, that salmon color. If you look at 2022, oops, we lost population. It was right around 6,000 people worth. And just as a frame of reference, we have about 650,000 people in the Portland metro area. But look at Boise. Boise's been all over the news because their population has skyrocketed. Well, so if you look at it as a percentage, yeah, it sure looks like it, right? But Boise has a population of about 250,000. So yes, when you get a good chunk of people moving in there, then it really skews those numbers, and it looks like all of California is moving to Boise. But what I really want to get into here is that we've had less people in Portland. Home prices did not crash. Rental rates did not crash. So really, I am pretty bullish on Portland. I think that we're going to get more growth in here. I think that the city is going in the right direction. We're going to get more jobs, and therefore more population growth. So I can only imagine that is going to put increased pressure on rents and home prices, because as I mentioned earlier, yes, building permits have slightly gone up, but they're nowhere near where they need to be and where they should be. So buckle up. I think that things are just going to continue to go up and up as far as rents and home prices. So my biggest takeaways, like I said, home values are going to continue to rise. This is through the rest of the year. We'll see what happens next year. Interest rates, they're going to stay where they are, at least for the next 6 to 12 months. Really, I can see them being anywhere from like the very high fives all the way up to 7% or so. They're going to kind of just pop around there for the foreseeable future. If you're waiting for them to drop, yeah, it's going to take probably 2 years for that to happen until we can get into like the mid to low fives or even the fours. Because like I said, the Fed took up the rates really, really quickly, but they are going to be pretty slow in taking them down. There's got to be a justification for that. And I just think that we are so far beyond having a justification to spur the economy and to take the interest rates down. So we'll see what that looks like. And then, as always, keep an eye on the consumer price index and the unemployment data. That's going to be your best barometer to what the Fed is thinking and what they're going to be doing. So they do want to see lower jobs being created, therefore higher unemployment. Unemployment in the Portland area is the lowest we've seen in quite some time. I think we are at pre-pandemic levels at this point. We're right around 3.4%, which is in line with the nation's average. So that was basically what I got for today. I want to make this super quick, but yeah, lots of things I think could be happening in the distant future, but things are gonna kind of stay the way that they are right now. So we're going to be looking at higher interest rates and higher home prices in the next little bit. If you want to talk about this more, if you agree with me, if you disagree with me, I love talking shop. So feel free to reach out to me. You know where to get a hold of me. Feel free to call, Snapchat, text, email. Don't tweet me anymore. You got to use the X or whatever the heck it's called these days. So anyhow, we'll talk soon, and let me know if you have any questions. All right. Cheers.